So let's say you're in the market looking for an advisor to help you with your planning. I think you should make sure that the advisor helps with tax planning because guess what? Not all of them do. It's my opinion that it's essential. It's probably one of the most important things that have to be covered in your planning. And guess what? Not all financial advisors do this. And so let's go over the 5 reasons that they don't and why you should definitely find someone that does. Coming up next. Hey, this is Mel Stubbs. I'm a financial planner with Christy Capital Management, where we're helping federal employees plan for a better retirement. If you need individualized help, go to christycapital.com and click Talk to an Advisor. I found an article on the 5 reasons some planners avoid tax planning by Joe Schmitz Jr. I like what he came up with, and I wanted to go over 5 of the points and then kind of give my 2 cents on each one of them. Tax planning is essential. And so for most of the people that we talk to, and this probably applies to you as well, is you have a pretty large TSP balance that's pretty much all traditional, meaning you're going to pay taxes later at whatever later tax rate happens to be. Your balance, we hope, will keep growing, and at some point you're going to be forced to take out required distributions. It's called a required minimum distribution at that age. When that happens, there's real potential that your tax bracket is going up. Sometimes 1 bracket, sometimes 2 brackets. And the point is you lose control of your income. And so by doing the tax planning and getting it right and doing it early, it's key. But guess what? Not all advisors do it. And so the first reason that they don't do it is that maybe they're with a bigger company and they just don't allow their advisors to do tax planning. These bigger advisors will tell you that you need to go see your CPA because they're not tax professionals. I had one person I was talking to on the phone that asked a question about a required minimum distribution, like a generic question about a required minimum distribution. And the planner he was talking to at a really large firm said, I can't answer your question on RMDs. You need to talk to a CPA. That's crazy. If the company is too big and won't let the advisors help you with this, in my opinion, you need to find a different advisor that will help you. Would I prefer that advisor to be me? Yes, sure I would. But even if you don't use us, you need to use somebody that helps with tax planning. Sorry to interrupt, but if you're watching this video, you're probably thinking about your federal retirement, and there are some important decisions that have to be made at retirement, and messing those up can be catastrophic to a successful retirement. And that's why we wrote the book, Your First Federal Retirement, the 10 decisions that could make or break your retirement. All of these decisions have a lasting impact. Make sure you're thinking through each of these and you're picking the right strategy for you. Get your copy today. Second reason is that they may not have the expertise. It's definitely difficult to do this type of planning, and it takes another level of knowledge and training to understand it. Our owner here at Christy Capital, Brandon Christy, is a CPA. And so we've been told a lot of great information about this, going through tax returns, line by line, figuring out how things affect income. So just like you probably want to make sure that the planner you're working with is a fiduciary, it's my opinion that you should check to see, do they actively help with tax planning? And to do that, they're going to have some expertise. Whenever I meet with someone that says they already are working with a financial planner, I always ask, what did they say last year when they looked at your tax returns? And if the answer is, well, they didn't look at my tax return, then they're not actively doing tax planning. Now, the third reason is they may not participate in ongoing education. There are a lot of law changes. There's been a lot of RMD changes over the last several years. When you used to could turn on RMDs at 70.5, and then it went to 72, then 73, it's gonna be 75. There are all kind of rules that change in the tax code. You need to find somebody that is keeping up with these. If your advisor is not proactive and staying current on the tax code, you will likely be getting outdated advice, and that's no good. The fourth reason lots of advisors don't do tax planning is they're not willing to commit the time that it takes. Most advisors are helping hundreds of clients, and so they just don't have the time to do the extra learning, the extra education. There again, I think it's so important that you need to find somebody that does this, that will help you with it. And then the last reason, and probably the most despicable reason, is that they are concerned about their compensation. So the way it works in financial planning firms is that they charge a fee based on your assets under management. And that's based on the amount of money that they're helping you with. If you do a Roth conversion, a lot of times we're having to pay the taxes that are owed on the conversion. Meaning if you do a $100,000 conversion, let's say 22% goes to federal taxes, 5% goes to state taxes, that means that $73,000 would show up in the Roth account. Now, the way the advisor looks at this is, how do they get their revenue? They were charging a fee on $100,000, but then after doing the Roth conversion, now they're only going to be charging a fee on $73,000. That's bad for the bottom line of a financial planning firm. Some companies use that as an excuse of why they don't help with tax planning. I think that's terrible. As fiduciaries, we are supposed to be recommending things that are in your best interest for your situation and best for your pocketbook. Our pocketbook is irrelevant. The fact that our fee will go down a little bit because you did a Roth conversion should not play a role, and if we are truly a fiduciary, Roth conversions are important. Getting rid of the tax rate risk, like that risk that taxes might get worse later, that is within my fiduciary duty to recommend that to people that it makes sense for. The fact that we might have a smaller fee next year because of it should not play a role at all. This is just my opinion, but if someone claims to be a fiduciary but does not do tax planning, I don't know how they can call themselves a fiduciary. In the vast majority of instances, if you have $1 million TSP, Roth conversions will be beneficial for you at some level, at some amounts. It is our fiduciary duty to recommend these things to you that are beneficial to you. So if you are actively looking for somebody to help you with planning, if you're a federal employee, I would recommend that you find somebody that specializes in your federal employees. We certainly do that. We've been doing federal retirement for around 15 years or so. We used to train inside the federal locations before COVID. Now we're doing YouTube videos, webinars. We just wrote a new book on your first federal retirement and the 10 decisions that can make or break your retirement. Federal retirement is what we know, and I think it's worth working with somebody that knows that. But then also actively doing tax planning. If you have a CPA or a tax preparer you work with, you'll want your advisor and the tax preparer to work hand in hand. Let's talk about it. If you do your own taxes, then let's talk about it. We can help steer you in the right direction so that you know the tax implications of doing a Roth conversion, but then you also need to know the implications if you don't do it. If you wait and just let taxes happen by default, I'm afraid you're going to overpay. So either choose to do tax planning or not to do it after seeing and understanding the basis for that decision. Don't not do tax planning out of happenstance. If you're looking to work with somebody, we'd love to help you. We'd love a shot at trying to help earn your business. Reach out to us at christycapital.com. You can click Talk to an Advisor. We can talk over your situation, see if we can bring some value to it. Show you what the value would look like before you ever decide to actually work with us. Maybe you've got some misconceptions about Roth, so check out this video right here, 8 Roth Misconceptions Explained. My name is Mel Stubbs. Hope to hear from you soon. We'll see you on the next video.